Welcome to TradeTheMBI.com. This is John's reports for the 26th, and hopefully everyone that celebrates had a wonderful Christmas. And as we head towards the year-end trade, what can derail this positive move? Well, the fact that we've already extended so far beyond the 76, and you can see that range between the 176 is quite enormous, and that becomes difficult to sustain. You're going to have some pullbacks into a range within it. We can see already, the positive extremes that exist, so we know where those retrace levels start to go, and it's just a matter of picking ones that haven't been filled, obviously right to here. So you have the primary one taking you back to the just under 47 range. That would be a pretty significant move, but it would merely get you just back in the range of modifying this extreme nature, and would be rather normal coming back to retest the previous high back there from late July. But as it is now, readings still looking fairly decent. I mean, you got zero short activity at 1.33. We talked about this. The DOC with the steel moving back above negative 13.5 would be a new bullish opportunity. Shakeout starting the day with an improvement, so that would cancel out the decline that we've seen in there, and that just pretty much eases some of that pressure. All in all, the real warning signs and trouble aspect would be a move in oil. Getting back into that mid 80 range would cause inflationary pressures that would be real tough for the Fed to continue to counter against. And the fact that the Fed has said that they've, softened their position, they haven't actually cut anything yet. It's an expectation that rates will have to get cut, but that hasn't happened yet. And of course, we always know you buy the rumor and sell what actually happens. And anything that throws, you might want to call it a monkey wrench, into the mix really presents a lot of downside potential. But that's the whole fear trade. You always have to have that fear rise where you're going against what potentially could happen. Because there's too many people positioned for an absolute collapse of everything, which we've talked about this for quite some time and hasn't existed. Yes, there are troubling elements, but that's always the case. There's never a time that isn't a situation. More interestingly, when you have treasuries this side up, upside down relative to where real rates are at, is problematic. And the Fed, from their standpoint, I'm sure is viewing banks and looking at a lot of those unrealized losses that they're sitting on, potentially problematic, because at some point they will become realized losses as long as rates remain higher than where the large bond portfolios of many banks are at. And so that throw in also deficits and everything else that are associated with the higher rates. There's some difficulties out there. No question about it. Oil still in the low 70 range, not great, not horrible, but you move that into the mid 80s and everything starts to change dramatically. And with the Red Sea shut down, question becomes, will that start to have an impact? And if so, when? And or if it doesn't have an impact, does that tell you something about where economic activity is? And a significant drawdown in that activity would certainly mitigate that. And I think if you see oil drop, that becomes more of a concern, that it's about economic activity being reduced. And that is something that we're always paying attention to. Euro continuing its push back up into the healthy range, despite the fact there's nothing good happening in the Eurozone. But the idea that, U.S. interest rates would ease would take pressure off of, the need for converting into dollars, as well as oil being at a softer rate. Again, oil jumps, Euro's going to have to fall accordingly. Just some basic realities that exist. Gold in its slow eke up, very slow. This should have accelerated much quicker than it has. But again, we've talked about this with the paper derivative market. You can do a lot of fun things, and it really holds things from getting out of control. The crypto space becomes a lot more interesting these days. Well, it has been since we talked about the potential breakout back here in October. And that move has been pretty consistent, and I don't see that that's going to end anytime soon, particularly when it comes to some of the healthier ones. Bitcoin, they've got their halving coming up in the first quarter, of course. Again, one of those, you're buying the potential of the thing, and then most likely as it happens, you'll get the reduction from there. But overall, readings were pretty decent. Still no real major short activity. ETH caught up fairly decent within this overall run, and they're pretty comparative at this particular state. So all things being equal, the alternative space clearly is being pushed more towards the crypto side of things. When we look at it from a 50K standpoint, you can see run up. We had the fill back in, which took out quite a bit of it. Didn't fill in all of the positive extremes. So, that again takes us right back to the daily, right around 4,700. So clearly have an idea where things go. And of course, within this range, pretty simple to get that mid 47 range here where the 0% sits right now. But as it is, fairly positive, no real objections. So unless there's some news event, not likely to see anything change, but I think we're still going to see intraday pretty decent swings. When we look at the pre-market, a lot of noise here with a 5-minute chart, but still on the plus side of things, and that could vary back and forth. Of course, the holiday trade, you're going to have back and forth. A lot of people won't even be back until the start of the new year, so I think that allows for a lot more range movement, and we'll see if anything changes from the reading. But for now, everything's pretty calm, and until something new happens, I think that we're just probably going to continue pushing higher against the narrative of people who are, afraid. And once that converts and everyone turns super bullish, well, then you've got an opportunity for something. But as it is now, all things are good. As always, though, trade well. Anything relevant, I'll put it on the Skype chat. We had some nice charts I put up before, which really detailed a lot of what was taking place and worked out quite nicely. As always, have a good one.